Shares of Tesla sharply higher today, up 15% at the moment as the company passed a major milestone in China. Chinese regulators removing restrictions on the EV maker's advanced driver assistance technology after passing the country's data security requirements. As part of that deal, China's Baidu will provide mapping for Tesla. Those shares also higher on the news. And we should note this news coming on the heels of Elon Musk's surprise trip to China, where he met with the Chinese premier in Beijing on Sunday. For more on how significant this is to Tesla and to the stock going forward, I'm joined by Tom Narayan, the lead equity analyst at RBC Autos at RBC Capital. Tom, good to see you. So I get conceptually why this is a big deal. The part that I don't get yet, maybe you can help me with, is how relevant is the existing U.S. data in training for Chinese full self-driving, or regionally is this completely separate training? Because I imagine, data you get training in Des Moines isn't going to be that great in New York City, right? We drive different in different places in this world.
Yes and no. So what we've learned from FSD in the U.S. is the highway driving is already as good as it's going to get. It's amazing. The difficult part is the urban environments. And what we've noticed from urban environments in China is that they actually are pretty similar to urban environments in the United States. And the other thing I would note is, remember, the Chinese, it's a central government authority that wants this to happen, that wants to have level 2+ and potentially more robotaxis, et cetera. So there is a more likelihood that we'll get to autonomy faster, actually, in China than there will be in the U.S. So while, rural areas, highways may be somewhat different, that part is not the difficult part. It's really the urban environments. And in the dense urban environments in China, it's actually not as different as what we have in the U.S.
Looking out for investors, is there a kind of TikTok risk here for Tesla? Teslas are, driving around with cameras on them, sensors, looking at who's going where, how people drive. The argument could be made, I'm sure, from the Chinese government side, and probably has been made. It's why it took this long to get this kind of approval. That, boy, that's spy material if it's all getting sent to the U.S. So could this end up being a bargaining chip getting turned on and off in these periods of U.S.-China tensions? Or is there enough benefit, social, societal benefit that China's getting that they're not going to want to do that?
Yeah, this has been going on for a long time where they didn't allow that data to go back to the U.S. for the, algorithmic learning. So clearly the reason why they accepted it now is there's a reason, and it's what you just pointed out. It's safety. FSD in the U.S. is 5 times safer than a regular car, not 5% more, 5 times safer, right? So, governments like China, certain states in the U.S., they're looking for the greatest good to society. It's saving lives. It's definitely a huge utility that it does. So I think it's really them looking at what's the best thing for society, and it's saving lives, limiting accidents. That's really what's the driving force here.
Does this end up helping Tesla longer term with what might be seen as a margin problem, right? There have been all these price cuts as Chinese EV competitors are going up against Tesla. Do you think Tesla is going to license this technology to others within China and therefore make margin whether they're selling hardware or not? Or are they going to keep this internal Apple style and use it to try to justify selling their cars either at higher prices or getting a government subsidy if they can prove through data that it is safer?
Yeah, and I'll just want to point out, I've had FSD and Robotaxi together worth like 70 to 80% of my price target for a long time now, almost a year. So it's not only it is the margin, right? It's the software business subscription. My model has it at $50 a month, and they've lowered it from 200 to 100. Just imagine when you put the gross margins on a software product, the multiple you can get. So part of it's the valuation you get from re-rating the stock as a tech company, a software company. The other aspect, exactly what you pointed out, is the margin story. And we've seen what's happened with auto margins coming down. They probably will come down some more with the new affordable car. But it doesn't matter if you can slap on an amazing subscription on it that gets you a higher margin. So if we can see margins overall in aggregate slowly creep up because of FSD take rate, and we're hearing already the version 12 free trial was a smashing success, then that translates into greater margins overall. you'll definitely see the narrative for Tesla change from being a car company to something obviously much, much more.